What's up guys, it's Alex, and in this video I'm going to show you the new earnings pattern that you should be aware of that has been forming on many stocks here in this earnings season. Okay, so stick around to figure out exactly what this pattern is so that you can profit off of it. Alright guys, there's a reason why I'm the options trading champ, and it's because I'm noticing things before other people notice them. That's why I'm profiting on things before other people profit on things, right? Okay, so let me show you the new pattern that's been developing here in the season. So first off, before we get into this pattern that has been so effective this season that I've noticed, let's first go over the pattern of last season. Okay, so first let's figure out when was Tesla's last earnings date so I can point it out exactly on the chart because I don't remember. Okay, but basically last earnings season, guys, every single time you reached the all-time highs, you shot down. So 7/22/2020, okay, that's going to be back here in July. Okay, so basically when you're at these top levels, you can see Tesla here drops after earnings. You see this, guys? So basically it gapped up, dropped for 2 days, right? So you saw this with all the stocks last season, pretty much any great growth stock, any really just, on the rise stock like Tesla, Amazon, Shopify last season, okay? And so going into this season, that was our main strategy, and it really still is. And I'll show you when to short the bounce and when you're actually going to use this new pattern discovery that we figured out this season. Okay, so you saw last example, last season, right? No matter what, they gap up and they drop, right? Okay, but what about this season? What is the new pattern I found? Well, guess what, guys? Remember in this daily trading video today, I pointed out TTD, it was up on super low volume, and my guts, or not my guts, but basically I just wanted to short it so badly. But I've been starting to get familiar with this new pattern that's been forming, and I said I've been noticing stocks that do this have actually been continuing higher, and I said it was a 50-50 trade, and that's why I would stay away from it. But now that I was actually, noticed it, now I'm ready to take advantage of this on future stocks. So what is this pattern? Well, you can see here, it's whenever you break past your all-time highs after earnings. So typically you think, okay, just broke past its all-time highs on earnings, it's way overpriced, let me short it. Okay, but this season is different because the market conditions are changing. It's a different time of the year, Q3 2020, and we're just in this different stage of development. A lot of these companies are finally seeing this extra growth, or this actual natural growth, right? Not the stimulated growth by printed dollars and all these other factors. You see what I'm saying? So TTD Trade Desk, what do? They gap up past their all-time high and continue higher, calls at the open. What happened to Melly? All right, Melly gaps up past its all-time highs, calls at the open, continues higher. What was another example I had written down? Roku, all right? Roku basically gaps up past its all-time highs. What happens? Calls at the open, boom, goes higher. Square today, right? We wanted to short this thing today, guys. What happens? Gaps up pretty much at the all-time high, and then based off volume, it actually surged higher. Okay, so this was that trade today that we had planned that I really, really liked. Okay, so going into today, our strategy was to try and short the top of Square. But you'll notice it starts to form this cup, and as it's rising, it's doing so on extremely strong volume. Okay, so this was my original entry point on Square, but as we get there, guys, who takes a trade when you're surging higher on strong volume, right? If you see these huge green candles and on good volume, why would you get in? So I wait, I delay my entry. Okay, finally we start to show a little weakness. I'm like, okay, this is good. I'm going to get in. I get in, and then look at the volume as soon as it starts to drop. It's just almost non-existent. You see what I'm saying? And so this is when I knew it was pretty much a fake move. I stand with it for a little longer, and I'm just seeing that there's just really no sell volume. Okay, and this thing's likely to continue higher. I sell out, take the small loss. But look at that, guys. I mean, we get in about here, okay, and then what do we lose? About 2 points. Okay, so that just goes to show how effective it is if you know how to cut back, tolerate your risk, right? You know when to get out of your position. And so on a trade that actually continues and surges higher, by noticing the characteristics, right? That's what I say. You got to know what you're doing. That way you can minimize your losses and stay in the game. If you blindly short or you blindly take someone's opinion, you will get crushed. You have to develop your own opinion. You have to develop your own skills. Okay, and that's full display there of one way that we say to likely enter here. But what do? I don't enter there, guys. I entered here, took a small loss, even though we were green right here, took a small loss as it continues higher. You see what I'm saying? So you got to be able to react, because nothing anybody says is going to be 100%, accurate, right? Because I could say Amazon's going to drop tomorrow 80 points, but it might drop 78. You see what I'm saying? So, nothing's ever going to be accurate, even if you say it. The only thing that's really been accurate is our oil prediction here, and then tech selling off. Okay, but besides that, really, our election data has not been on point, and most likely can be attributed to the split government, and it's just been absolutely crazy. Okay, so like I said, you've got to be able to adapt and notice these things. But like I said, we're fully able and aware of what we did wrong, and then we're also able to admit the things that we weren't right on. And a lot of people can't do that. A lot of people want to delete their videos on YouTube if they post something that's wrong. I'm not going to delete that, guys. It's a part of the plan, and I want to show you guys the thought process that goes into the wins and the losses. You guys see the winning trades, and we're probably putting out 80% winning trades, 20% lose, and that's a great rate. And I mean, at the end of the day, you'll still have people who go and blow their accounts on the 20% of the time that the trade doesn't go right? But, with the 80% win rate, right, I bet if you go back and count all the trades on the channel and go count back our win rate, probably is about 80, 75, 78, I don't know, somewhere around there. I'm not even kidding. And so, that just shows even with a high win rate, right, if you decide to play it badly, you can still really fuck yourself over, and that's why you got to know what you're doing. All right, so this was that pattern that I've been noticing. Like I said, they're breaking past their all-time highs, and it's starting to, we're starting to see it happen a lot here. Okay, so I thought you guys should be aware of this. I think this is an awesome discovery. You're not going to see it on any other YouTube channel. Nobody's going to go over this, okay, because we're a different style of trading, guys. We're not scalpers. We're not looking at the 1-minute candles and going like, oh, it looks like weakness here, let me reverse. And we're not trying to capture a couple points, right? We're capturing high DTR moves, because that's what really makes you money when you're trading options. If you're just targeting 2-point moves, first off, your entries have to be ridiculously spot on. You got to pull up that active trader. You got to have extremely fast execution. And to be honest, I'm not trying to make $200 gains here, right? We're trying to make more than that, because you can get 5 trades correct at $200 gain, but the one time you decide to step out and abandon your risk management strategy just one time, which it will happen, guys, because that's what trading is. Nobody's perfect, and 99.999% of traders aren't going to stick to their plan 100% of the time, and that's just the truth. And there are very, very few people who will stick to their plan precisely. Okay, and I'm trying to show you guys what's the most effective way for a regular person who, is sometimes lost, sometimes confused, gets emotional. Okay, and that's why our strategy is so effective, because we short the top levels, we short the bottom levels, but you got to be able to identify when the things, when the trade is over, when it's against you, and when it's going your way. All right, so guys, really good discovery here. Like I said, the 4 stocks that I've noticed so far is, Melly, TTD, Roku, Square, and some other ones that we didn't go over, but it is a very familiar pattern that we should get familiar with, right? Breaking past that all-time high, calls at the open, continue higher. Okay, so let's keep that in mind. All right, and then I also promised you guys I would show you how to differentiate a bounce that you want to short and then a bounce that you actually want to continue and buy calls on. Okay, so here's a great example of a bounce you want to short. Now, I know we had people make money on this one. It was Shopify. We called it puts at the open or on a bounce. And so look here, what happens to Shopify? Gaps up, and then boom, short the open. Okay, so this is an example of something you would want to short, and let me show you why. Well, here we're not breaking through any all-time highs on some incredible earnings, right? So you can see it's clearly below the topping levels, and that made for a very good short here. Okay, so this is actually where the previous data earnings, then it has earnings, gaps up here, puts at the open, back down. Okay, so that's a great example of something you want to short the bounce on. Amazon, it's another great example of what you want to short the bounce on. It's whenever it gaps down strongly, okay, and then you want to short the bounces on the strong gap downs with strong volume. Okay, obviously there's a lot of other things to get into it. This is a simplified version, and basically that is the gist of it, right? But obviously, like I said, there's a lot more that goes into it. There's the emotions, the mental game, actually defining the levels, and all these other things, which I'll show you guys how to do exactly in the course we'll have soon. So I know I keep saying it's coming, guys. that shit takes a long time to put together, especially when I'm packing it with information for you guys, so you can really leave the course knowing everything you need to know when it comes to reading charts, so you can put together trades and be able to identify them just like I do. Okay, so guys, that's besides the point. I'm Alex. I hope you found the video useful. I hope we can put some profitable trades together now based off this new earnings reaction we've noticed and the characteristics. And as we start to notice more, I think we're going to get a very good feel for what makes these breakouts higher actually, reliable, right, instead of shorting them. Okay, so with a couple more examples, I think we're going to get a really good feel, and we're going to have, a wider variety of trades to take on more of these stocks, right? So we're not going to have to sit out on these stocks that we're not sure. Hey, should we short it here? I'm not sure, so I'm going to leave it alone like I did with TTD today, right? Next time we're going to be able to notice, hey, this is just like TTD. Hey, this is just like Melly. All right, we're going to buy calls at the open. Okay, so guys, that's the plan. Like I said, I hope you enjoyed the video. Drop a like if you haven't subscribed, if you're not, and if you want to be on our email list for winning trades, make sure you click the link below. Alright, so guys, we'll see you guys on the next video. I'm Alex, the Options Trading Champ. Bye.